Welcome everyone, welcome to my YouTube channel. Dave Ganderos here. As you can see, I try to put out videos every day. If you're watching this video, be sure, if you like the content, to like and share. Also consider subscribing and clicking the little bell so you can get notified when I put out a new video. And last thing real quick is to look underneath the video for additional information in the description. I share ways to contact me on social media. I show you some other opportunities I'm involved in. If you're interested in getting the charting system I use here to show you some technical analysis, the link is right here. If you decide to upgrade, I make a little bit of money. You guys make a little bit of money. We're all happy, and it's a really good platform to chart technical analysis and see what's going on in various markets. Before we get started, I just want to say one thing. I am not a financial advisor. I am showing you what I see on the charts. It's for educational purposes. I want to hopefully show you ways where you could start learning technical analysis and put patterns on the charts and do your own technical analysis and figure out your trading strategy and what works best for you. And just use my content and use my information to learn how to do that for yourself. It's a skill set that no one will ever take away from you, and it's a huge market depending on what market you get involved in. You can certainly, as you get better, earn a living trading and generate an extra source of income for yourself to attain your wealth goals or your financial freedom goals. Or even if it's just to pay off a bill, whatever goal you set, you can attain as long as you keep emotions out of it. You just draw what you see on the charts and wait for price action to fall into your traps. So it's very important. You got to have a mindset. You got to continuously stop yourself from being greedy. You got to be able to take a loss if you made the right decision, or even if you made the wrong decision. You got to be able to get away from a trade, because you want to be available to live another day, so to speak. And as long as you minimize your losses and you maximize your gains, you're going to be okay. All right, so with that being said, that's all regarding the channel. Please like, share, and comment. Subscribe, click the little bell so you can be notified with a new video. All right, today is going to be a little different. I've been talking about it over the last couple videos. I haven't been able to do it, and today I'm going to do it. I'm going to talk to you a little bit about Forex pairs. So you may or may not know anything about Forex, but just like the cryptos, each country has their fiat, dollar or British pound, and they're all compared to different currencies of other countries. So the British pound against the Japanese yen, or the British pound against the US dollar. They all have the same kind of things that we deal with in crypto world, where we have Bitcoin against the dollar, Bitcoin against ETH, ETH against Bitcoin. Same kind of thing. So anything, if the bottom, if the one after the slash goes up, the British pound chart should go down. Same thing with the US dollar. If the US dollar goes up, the British pound will go down. And the opposite's the case. It's just a normal ratio, numerator and denominator. And when the denominator gets bigger, the overall ratio goes down. When the denominator gets smaller, the overall ratio goes up. So if the Japanese yen went down, then you can see that's probably what's happening here. Or it gets a little bit more complicated because the British pound itself could be strong. So you can have a more of an impulsive move if the British pound is getting stronger and the Japanese yen is getting weaker. So that actually increases the ability for the price to move in one direction. So just like we do on crypto, I'm going to kind of show you a couple things here just as a first time thing. See what kind of feedback I get. Please leave. What the heck did I just do? All right. Leave a comment. Let me know. Let me know what your thoughts are and interests, and just just let me know what you would like to see more of. All right. So I'm not sure what's going on here. Oh, going down too low. Okay. All right. So you got the volume down here. You got price action. This is on the 1 hour chart for USD, GBPUSD. So I don't know what you see, but I kind of see already a possible triangle forming. If you take it from this move, this is a crazy move, so you might want to just ignore that. This is when the price really made a directional change. So you take it from here to here to here, and then up to here. And you're looking for the pivots. All right, so it went from here to here, then it pivoted back down, then it pivoted back up before it went down. Now it's going up, and you can kind of see how it's staying within the triangle. So not only do these patterns play out on crypto, more importantly, they play out even more on Forex. You know, Forex is a multi-trillion-dollar day volume area. So, you know, there's not as much manipulation by the average person and what we call whales in crypto. You know, unfortunately, the manipulators at this level are the big banks and the institutions and the money maker market makers, as they call them. But it's really the big banks that are gonna move these markets. Now, you don't need to get in right away, but you should get in and get out before the major moves happen. And you could use, Fibonacci again. I haven't done anything here, so this is going to be real time with you on this. Let's see if we see any obvious Fibonacci moves. So let's go from here down to here. Again, as crazy as this wick is, it is the pivot. So you could see already off this pivot coming back up, you can see there was a little bit of action here at the 50, a little bit of action over here at the 5.5, and then look at the 618 and the 6.5, more action. So just like we do in crypto, if you now I feel a little bit better, and I have no like I said the other day, in crypto land, I'm just a natural bull. I really don't go, I don't go to the bearish route and trade on the downside in crypto. But when it comes to Forex, I could care less. I go where the money is, I wait for the breakout, and I trade both sides. I have no personal hiccups or holdbacks of going negative on Forex. For some reason, no, I just can't get in my mind, and I just can't do it on the crypto side. And I'm leaving money on the table because there's a lot of trades on the downside. And really, what I got to do for myself is once this bull market is over, or, sometime in 21, or maybe it extends into 22, I have to get used to possibly playing the downside, because we will go into a market cycle where a bull market will play out again. And unless I wait, for major retracements to get in for a possible bounce on the downside, more money is going to be made on the downside in the bear market than it's going to be made in a bull market. So I got to work on that for myself. That's just me being transparent to you, that I have a hard time thinking negative about crypto, and that's because I just want to see things go up. So, but on the flip side, I have no reason not to short in the Forex market, because we all know the dollar sucks. And the dollar is rallying right now a little bit, which could drive this down because of all this stimulus. But smart people realize the dollar is going down. So you got to take into account the dollar index in here as well as we do in the crypto area. But again, like I said, I have no problem shorting Forex. So you just got to place the patterns, place the Fibonacci's, and kind of just see where it can go. This is also a double W pattern forming, which could suggest that it might go up, and that makes sense. That makes sense if the dollar is going to be weak. So you kind of just set the trap here. You place it, and then you kind of wait for it to break up or break down with volume. So you can see here these little peaks. This is probably where you want to see volume pick up, to see these kind of drastic moves. So right now the trap is set, and you just kind of sit back and you watch. And I mean, you can go back on a larger time frame and you can kind of see what's going on here. Oh, you actually got something interesting happening here as well. Let me delete this so that we can clear up the chart a little bit. But look at the higher time frame. This is the 4-hour chart. I don't know. I haven't really done this, but it looks like it's possibly doing the same kind of thing here. And look at that. It's operating right at the 6165. So this could be the retracement for it to move back up. So you got confluence, what they call confluence. You got lower time frame pattern showing. You got the W pattern. Then when you back out to a higher time frame, you can see that there was a retracement, a pretty large, deep retracement here. It's reacting on the 618. Let's go in a little deeper here. You can see there was reactions here, the 618 and the 65. So it's kind of saying that, all right, well, you know, again, market makers could come in here, big banks could come in here and fool everybody. But what you're doing is you're stacking the odds in your favor. And you know, or you may not know, you know, a lot of the algorithms are based on Fibonacci's. So what I'm seeing here at the higher time frame on this bigger pivot from low to high is that it's kind of forming a base here at the 618 and the 65, which kind of coincides with this right here, which, you know, seemed to be an area of influence in the past. So you got the resistance, you got the support, so it's forming a base. It's performing a lower time frame W, which is also called a double bottom, and we could probably see this price go up. Now with Forex, you know, you're not looking for the huge crazy gains that you do in crypto, but if you're consistent and you don't get greedy and you look for what they call pips, it's percentage points in percentage, or percentage in points. Basically, it's just a way to each pair is going to have a certain value of a pip, and instead of talking about dollar values, you typically go for so many pips. And if you have $1,000 account, you may have a lot size of 0.01. If you have a $10,000 account, you might have a 0.1. And instead of talking about dollars that you're making, you just talk about pips. And it kind of normalizes and standardizes the lingo so that everyone's on the same page, where you don't have to worry if you have a $100 account or if you have $1 million account. You just talk about how many pips you're looking to get out of a trade. And you kind of do the same thing. Once it breaks out, you set your stop loss, you know, below a resistance level that you feel comfortable with, and then you figure out your risk management approach. So very similar to crypto. Some will say that it's a lot less volatile, and a lot of people stay away from trading crypto because it's a lot safer, and because there's so much money involved here, these patterns really play out over and over again in the Forex market, because there's a lot of money involved and not a single person could affect the markets. It's only when the big banks get involved where you have money, you know, pushes and stop loss hunts and stuff like that. But that's big money that comes in to do that. It's not the average retail investor that are doing that. And just like in crypto, well, I mean, unfortunately, the average retail investor and trader in Forex never make any money. And unfortunately, the big banks take advantage of them. They stop hunt them. Unfortunately, a lot of retail investors over leverage their accounts, where just a couple moves in the wrong direction and their accounts are blown. So I can't stress enough the idea of mindset, working on your mindset, working on your emotions. If you're able to, there's trading systems that I'm involved in that takes the emotions out of it. It just basically does your strategy that you set, and it just does it for you, as opposed to you thinking, all right, should I stay in here? Should I buy now? It just sets up your configuration of what you want, and it does the trading for you. And you pick your pairs, and you put your money into your broker account, and you just make the connection of the software to your broker account. The software doesn't have any access to your funds. It's just an API that goes in and executes trades based on your settings and based on your approvals. If you're outside of the United States, there's automated trades that happen automatically for you. But if you're within the United States, because of the SEC and regulations right now, you have to manually go in and click a button to say, yes, I want to take that trade. So if you're interested in doing that, where you don't want to, like, you configure your settings based on what you want, and then you take out the emotions, and the software is running depending on if you're in the States. You got to manually approve the trades, but if you're outside of the United States, this software is going to work 24/7 to generate profits. Now, they're not going to be profits that you see in crypto where you're making, $500,000 at a time. Depending on your lot size and your account size, it could be a couple dollars here and there, but the compounding effect takes over. And as you grow your account, from 100 to 200 to 1,000, you scale your lot sizes up, and then that dollar becomes $10, and then that $10 becomes $100. And before you know it, you're taking a small account up to thousands of dollars over time. So again, it all depends on if you're in the States or outside the States. If it's something interesting to you, look below in the video description. There's a link for the Forex trading software that I have. Get started, send me a message. I can invite you to some webinars, and you can learn the various softwares that we have that operate for you. And it's totally in your control. You maintain your money. No one has your money, and you decide what you want to trade and what you don't want to trade. You set the settings. Now there's no company recommended settings. There's a lot of trainers out there and peers that you can talk to kind of get a feel for what they're doing and what type of settings they have. But the company itself is only licensing the software. They're not a financial advising firm. All they do is they give you the software that you run on your account, and you license it on a monthly basis. All right, so that's all I'm going to say about the software right now. But again, you can see the patterns show up just like they do on crypto. So this is the GBPUSD, and we'll follow up and see what ends up playing out. But as you remember, or may not remember, the price targets on this type of pattern, you go from the top to the bottom where the price action pivot, basically the pivot from high to low on that first base, like basically the base. It's a little shorter than the base in this case because the pivot wasn't straight up and down. So you're gonna get a little bit less here, and then you just set it where the breakout happens. So assuming that the breakout happens here, then what you would do is you would get into a long trade, and you would set it so that the breakout happens there. Your target's up here, and then you would have to decide where you want to put this stop loss. So really, for sure you want to put it below this trend line, because you expect price action to right now it's resistance, but once it breaks out and comes back, you expect it to be support. So you could put it somewhere up here if you want to do really low risk, or a lot of people put it down below the previous price pivot. And you just got to kind of see what your risk to reward ratio is and what you're willing to risk compared to what you're willing to make. So right here you got like almost a 2, depending if you put it down here somewhere, you can get a 2 to 1. So you're going to make twice as much as you're risking. You might risk $100, you're setting it up so you can make $200. So, certainly not less than 1 to 1. You really don't want to go for it. And there's other techniques, like especially with Fibonacci, you could play, even though you're putting it down here, you kind of know that it's been respecting this really good. So, but then now you're down to 1.36. But the key is, you don't really have to wait for it to go this high. They call it pips, and like basically on this breakout, you could just consider taking a 20 pip gain, which would almost coincide with this 55 right here, where you've seen some resistance and stuff. So So a lot of people get in and get out much earlier than all the way up here. And it just kind of depends if you're a scalper, if you're a day trader, intraday trader, swing trader. You got to kind of decide what works best for you. But a lot of people just go for 20 pips. You know, they do like a 0.01 per 100 in their account, and then they look for a 20 pip move and they're out. And you know, you set the stop loss here, and then you basically right here you get a 1-to-1. So you know that's, well, actually that's lower than that. It's lower than that. But the key is the longer, the quicker you get in and out, the less chance you have price action going in the wrong direction for you. So there's some benefits of just looking for a shorter move and then just, you know, like using whatever lot sizing that you are okay with for your account, and you just do that over and over again. So there's manual trading, there's automated trading. You know, the automated trading is going to calculate the overall position that you have. It's going to average you into a position, just like we talked about. You know, if you got in, like in crypto, if you got in here, maybe you bought 20% here, you bought 20% here, you know, you continue buying, and the overall average of all those positions average out to a break-even level, and then a net target that you want based on all your entries. And the software automatically calculates that, so you don't have to worry about figuring all that out. And you just basically use that strategy over and over on pairs that you have interest in. And you could pick whatever pair you want. You pick whatever broker you want. And you put in as much money as you want. And you have control. You could stop the trading anytime. You could withdraw your funds anytime. There's no approvals from any admins or anything like that. So there's some benefits, and it's a totally different market. But the first step is to kind of get an idea of what the market's all about before you make decisions like that. So that's why I'm showing you some patterns. Right now you can see it's actually breaking out, and we'll see where it goes. All right, so the next one I want to talk about is another GBP pair, and it's the Japanese pound, against the Japanese yen. Sorry, I can't speak today. So here you could see at the 4-hour level, we were kind of forming a rising wedge, a ascending triangle, so to speak. It just looks like it broke out, but even on a lower time frame, you could see even more that there was another another short-term pair that kind of broke out as well. I mean, a pattern that broke out as well. And you could see from like here to here to here to here. It's a smaller time frame breakout. Now we're also seeing a bigger time frame breakout. So if you want to go with the smaller time frame breakout, it already happened. Realistically, you probably should have been in the trade already. But again, just like the last pair, these patterns happen over and over again. You know, and if you go up to a higher time frame, you could probably see the same kind of Fibonacci patterns here. So like from here to here, let's just for the heck of it take a look at it. As you can see, look, it already had some action at the 0.5, came down to the 0.55. It touched it a couple times, then it wicked down real big, but you can see more action at the 6.5. You know, this one almost made it down to the 7.9. In my mind, if it breaks or gets as low as 7.9, I don't bother looking for the upward retracement. At that point, it's kind of gone so deep that there's a bigger chance that it might continue lower as opposed to bouncing going up. Let's check out this. This is kind of interesting. Let's look at this Fibonacci target negative 0.23 and see, for the heck of it, let's see if one of these targets map to that. It's kind of cool. So if you take that, yeah, it's a little bit more, but you can see it's not far. It's not far from the bigger pivot target by the algorithms. This one's a little bit more major. This one's the 4-hour time frame, so it's a little bigger move. And you would put that right there, and then so those are kind of the two targets that we have based on the little smaller pattern and then the larger pattern on the 4-hour. I mean, I only drew it on the 4-hour, but you can see it actually is on the 1 hour as well. You know, if you come back in here, it's just, you know, you can see there was a trend line mid here. There's some resistance here. There was a little bit more resistance right there. You know, it came up and came in here, so it, you know, certainly looks a little bit more within the pattern on the 4-hour. See, this becomes a wick on the 4 pattern because this is made up of 4 candles of the 1 hour. So that's why you see that, okay, price action came out, but it came in, then it hit it again, wicked it again, hit it again, wicked it again. So there's multiple touches here, and that's what causes this line of resistance. And then you kind of just connect as many as you can down here to connect create this other trend line. And then together, this is considered, the bigger one right here is considered an ascending triangle, ascending wedge or ascending triangle, where there's a flat line on top, and then you just continue getting higher highs until it starts squeezing itself in this apex area of this bigger pattern, and then all of a sudden it'll break out. Now, price-wise, I mean volume-wise, we haven't really gotten the spike in volume like we saw here. You see this drastic move down? You could see that, you know, the volume popped up a good amount. So you got to kind of look at this, and it doesn't always happen, but it's a very good indicator of a true breakout. So we'll see what happens. But again, my whole point here is that you can do the same thing that you're doing in Forex on crypto that you could do here. And in some ways, this is a less volatile market. Yeah, you don't make as much right away, but you know, you chip away at it and you build your account higher and higher, and you can create yourself a passive income here with allowing the software to trade for you 24/7 without you having to sit in front of the charts. You just set up your strategy and you let it go. Again, there's always more to be made on manual trading, but if you don't have that skill set and you just don't really want to be able have to sit in front of the charts for hours on end doing manual trades, there's something to be said to maybe decide to use software instead. And again, it's not a set it and forget it. You have to go in and you got to manage the settings and you got to do other things, but you don't necessarily need to know, you know, when it's in an uptrend, when it's in a downtrend, what's the RSI, what's all the software figures all that out and decides if it's a buy or a sell, and you just approve the trade if you're in the United States, and if you're outside the United States, the software will just execute the trades for you automatically. So I guess one of the advantages of being outside the United States, this truly will run 24/7 with or without you looking at the approval page. You know, outside the United States, there's no requirement for you to come in and click trades. Unfortunately, right now, until they decide otherwise, in the United States, you still have to go in and click the button to accept the trade. So it's a little bit, you know, you don't have to come in and do all the technical analysis, but you do have to log in and check your alerts and make sure that you click the approve button if you want to take the trade. If not, you might miss out on a couple trades if you're not watching it. So it's good and bad. Nothing's ever perfect, but you have to do your risk management. And by using the software, it takes out the emotions. Yeah, you might have to deal with the emotions of possible drawdown because there's always a situation where your account's down a little bit. You're never going to time the market perfectly where it's just going to go straight in your direction. So you have to stomach the drawdowns, realize the software will get you out of it. As long as you use the proper settings where you allow the breathing room for the software to do its thing, it'll get you out of the trades. If you're too aggressive with it, and you put in crazy lot sizes, and you don't have enough money in there to accommodate the headroom, maybe 1,000 pip in the wrong direction move, then you're not going to do well. But as long as you're realistic on your ideas of what you can gain out of that, and I can't specify guaranteed money, but I'll tell you this: as long as you're conservative and you set the settings up appropriately to allow that breathing room, you will make some sort of profits. And again, like I got to be compliant, and I can't promise any profits to you because I'm not a financial advisor, and the company does not do financial advising. The company is just a software licensing software as a service type thing, where you go in and you license the software for 1 month, and then you run it on your account. They have nothing to do with your account, nothing to do with your money. All they're doing is providing you a service software where you can apply it to your account if you wish. So again, just like crypto, you could do manual trades, but work on your risk management. Look into that. There's a site for Forex called babypips.com. A lot of free training software out there that you can learn what a pip is. You can learn the basics on Forex, and it's free resources. So as long as you're committed and you're able to learn on your own and study on your own, take advantage of that and go check out that site. It's a very good resource for Forex pair traders. All right, guys, that's all I got for today's video. I'll make another video about the crypto, but I did want to expose you to Forex and the fact that patterns, just like I've been showing you in crypto, also happen in Forex. All right, so take care, guys. Until next time. I don't know what happened to my video, and I'm not sure how I stopped the video now. I don't see where that went. Oh, here we go. I'm back. I got scared. I thought the video wasn't even recording. All right, guys, take care. Until next time, please subscribe to my channel, comment, like, and share. Let me know if you want to talk more about Forex or if you have no interest in it. Otherwise, if I don't hear anything from you, I'm just going to keep making videos from what I decide. And hopefully you guys will take some time and comment and let me know what you guys really want to hear about. All right, so take care.